broadcast is now starting. All attendees are in listen-only mode.
Good morning, traders. Hello. How are you? How was your week? Hey, guys. Based on the conversations, I assume that many had, yeah, exactly that, right, a tough week. And on our side was also not so good. But this is part of the business, right? We should not be losing confidence. We just need to apply the management rules and move on. Yeah, you're just amazing. In such weeks, you make 20% profit. That's insane. Yep, exactly. Guys, I was reading through the conversations in the group, and I must say I'm really amazed. I love how people are evolving here, and that's simply fantastic, seriously. Right? And the last thing that I just read was from Roberto, I believe, and this is exactly what we've been repeating for so long. One way to filter the very bad trades that you don't want to be involved, the trades where it's 50-50 or 60-40, you might take it, you may not. Ask yourself the question, is this trade really worth sharing with the group? Right? Imagine you're a signal provider and you have to put your trade in the signal group. Would you really go ahead and put it there? This is one of the best ways to stay in shape. All right? And this is exactly what we're trying to do in the signals group and on these Friday sessions, guys. Okay? Because the crowd puts pressure on you and it keeps you in shape. Okay? And growing means, of course, making mistakes, but also means not to repeat them. So imagine you have kids and you're a parent. You have to give your kid the responsibilities and let them evolve. Right? If you're always there holding their hand, telling them what to do, they will never learn how to make decisions on their own. And that's why the main focus in the club is learning and not copy signals. Because this club might be here for a long time, might disappear tomorrow. Okay, what are you going to do once the club and once we retired, for example? Right? We want to learn people how to trade, how to filter their trades, and just learn the discipline. Okay, that's why every single signal that we put, for example, it must be validated by you guys. Don't simply and blindly go ahead and take the signal and trade it. Always, always, always try to validate every single idea. Alright, just wanted to share that before we begin. Now back to the trades. As we said this week, not the best one for us as well. Many of the strategies also took some losses. Scorpio almost minus 1%, Gemini minus 0.5%, Divergence University plus 0.5%, Crystal Ball one trade which provided 2% profit, so it brings us back into the game. SRS doing good with 2.5%, Liver Code losing, and Triple B more or less break even, which brings us to around 3% profit. And in such market conditions, I would say that this is a win. Right, we managed to filter some of the bad trades, most of the bad trades, and you will see that we don't have that many trades in total if you count it. So again, guys, not being in a trade is a trading decision, and when the market is not giving you the best setups, don't fight it, right? Guys, can you see my screen? Yeah, sorry. All right. So let's begin with SRS. 3 trades this week, 2 wins, 1 loss. First one was the Kiwi. Okay, we said that we have both directions. Double wave up. This is an action zone, which we tried to break. Immediate reversal followed, and then we're back to this zone. Lack of direction, not clear conditions, obviously. However, we did get a good setup here in terms of a double wave, right? And this is what we are attacking. Clear double wave, more or less perfect distance between the touch points. We go ahead and sell here. This one lost spike up, we take the loss here. Euro Kiwi, the next one. Let's see what we have. Arranging conditions, right? And we have 2 out of the 3 rows telling us bullish momentum. And because we did get the double wave, the expectation here was not a scalping, right? Because in the ranges, what we are usually looking to do is buy near the very, very bottom or sell the top, right? So here we are attacking the trend line, the breakout, and the expectation is to get the price higher. Right? This is, of course, related to the longer term idea that you might be having, and boom, the price managed to break above right here and continue higher. And this is a classical setup, by the way. Breakout, correction, continuation. Now in this case, if your stop loss is here and you see the breakout and the price moves above this high, you could easily move the stop loss to this place. And then you're more or less at break even. Even if the price reverses from this point and doesn't reach your target, okay, either cash out here first part or at least move the stop loss to break even. Then even if you lose, you're going to lose like 1/10 of your initial risk. Welcome back then. All right. Then we got the QEN. This one, same story. We were trading inside this zone for some time. Small 15-minute range. Spike above, spike below, spike above, spike below. And this is where we actually got the breakout. This is also where we got the double wave, guys. And if we start measuring the 2 candles route, that could be the tricky part in this case, which we might go ahead and discuss further. Here you go. This is where your lows are, right? And either this one or the small candle afterward, still fine, which means this first leg is good. Now, if we had the situation like this, would you go ahead and take this trade without breaking above here? Let's say the validation was like that. No, exactly. Why? Because if you're stuck in a small range inside 1 or 2 candles, unless this is a bigger time frame where the moves here are big, like 50, 70, 80 pips, because when you have news, for example, you got one large candle, let's say 100 or 150 pips, and then the market continues trading in a regular mode. And if these two waves are, let's say, 30 pips each, then okay, you might go ahead and ignore the 2 candles rule, right? Because then you have, let's say, 200 pips range here, this one. But when you're on a lower time frame, definitely look for valid corrections. Okay, so that's about this one QEN trade, which also took the profits. And that's about SRS. Any trades that you want to discuss, guys, based on this strategy? Cool, moving on. Triple B. Also 3 trades. That's it. If the market is not there, don't force it. Right? First one, not the kiwi, the oil. We said in the shorter term, we're expecting the price to continue lower. And this is what we got. Right? Boom, boom. 1, 2. Entry. Stop loss is now making much more sense. Of course, the first one here would not have the double waves, right? Even this one, it's not even 61.8. This entry would also be acceptable because then the risk reward would also make sense, right? And then we're looking for the sell. Price moving higher, we reach the stop loss. Very, very simple. Now on the previous period, which is right here, this trade more or less would provide you with the move that you're looking for. But as we said last week, we're not always there trading every single setup, guys. Right? So sometimes you get the losing one, sometimes you get the winning one, sometimes you get both. We're not machines, we're not robots. We cannot always be there in order to go ahead and trade it. And same story. If this is your winning trade, then a bigger double wave from, I don't know, here or here would give you a stop. Right? So we missed this one, we missed a losing one, and then we catch that one. It is what it is. You simply cannot be always everywhere. That's it. Dorian, the next one. You remember from the live room, we're following this extension that's 261. Okay. And as we reached this level, which we're expecting to provide us with a special cycle, this is where we get a signal as well. Can we give it a shot and attempt here for a sell? Yes, of course. Why? Because we now have double top. We know that even if it pushes higher, this is the duplication that we're looking for. And the risk reward is now more or less fantastic for us. Is it worth trying to sell and short here? Of course. 4-hour chart, hidden divergence, perfect. Right, and we have a double top. This is the 1-hour chart. And this one, as you can see, provided the immediate push to the downside, collecting the target. Now, why not keeping this trade for the potential longer targets, even though that this one is pushing lower? Simply because we might still get this. Right? So in such conditions, spin it twist it as much as you want, the current market momentum is bullish. We had so much to the bearish side without any major corrections, which means basically once it starts moving, it could be kind of a V pattern, right? And it kind of did that exactly. You see, there is no correction here, a valid one, besides the first leg here. And when you know the market conditions are not ideal, and when you know that you're having a bad week, it's much better, even if you think only about the psychological part here, collect some cash, right? See the plus in your account. Smaller plus is much better than a loss, right? And then we got the euro yen, which is basically also in a bearish mode. Now this cycle we can split like that as a triple, or you can also split it as a double here, right? And just because that could be a deeper move providing a second wave, right? And this is a triple that could be followed by another triple to the upside. We basically go ahead and trade it because we have the stop loss much higher, allowing us and giving us the room, if we create a second leg to the upside, to have the room and this trade to still go in the direction that we're looking for. Nothing more, nothing less. And besides that, purely speaking about price action, we have now entered a pretty good action zone, right? You have the trend line, which is being broken at the moment. So the least we can expect is some sort of short-term pullback coming lower. Yes, exactly, Roberto, exactly. And the reason to take it is, once again, if this is a triple with a further continuation, you have the room not to take the stop loss immediately. Okay? All right. This is the triple B. Again, guys, just 3 trades. That's it. Libra code. Let's see what we have here. 4 trades, right? Starting with the pound, we said that we're bearish, expecting the 2 waves, 4-hour chart triple cycle, 2 waves up with a breakout gives us the idea to go and sell again, right? So this trade is basically happening something around here, and we still don't have the break below. That's pretty much the idea here. So what do we get, guys? Move up, corrective cycle, Libra code, setup identified. Extremely simple idea, which naturally fails with immediate push to the downside. That was loss number 1. Then you have the pound yen, a sell setup that we got. And now when you go back and when you look at all this, you might say, yep, maybe I shouldn't have taken this trade, right? Maybe this is not the ideal condition that I'm looking for. However, let's see why the trade was taken. Top of a range, 15-minute chart, right? So we're basically approaching a zone where we can expect the price to stop and reverse. Okay. First move down, another double wave up, false break, matching and respecting perfectly this zone right here. Right, and then we got the break below, creating for us this Forex Libra code setup, and this is where we get into the sell. Is this one clear as well? All right. And price pushed higher. Boom, we got the stop loss. That was trade number 2. Kiwi Cat. This is basically what we're looking for, right? We got this double wave, which is also an idea that we can go ahead and trade with SRS. We said that we have the levels, okay? But the price is pushing higher, guys. Do we have a confirmation for a sell? Not really. We got the false break right here, break above the trend line, starting to create higher highs, and we simply go ahead for the buy. Pretty simple idea as well. Just going with the momentum. That's all. All right. And the final one, the pound dollar. Oh no, sorry guys. Did we cover this one already? I think we did. Pound yen, Q yen. I'm going forward, sorry. Upwards. Q yen, 15-minute trade. All right. Move down. We're expecting the price to continue lower. We have the 1 hour and the 4 hour charts with the bearish momentum, right? So basically higher time frames supporting us to continue lower. First of all, double wave to the upside. Second of all, the software detects here a trade, right? And this is where we got the entry. Does it make sense? Directions are down. We have this let's say corrective move here, which breaks one low, second low, third low. Boom, we go down. Double wave, last high is being respected. This zone is also being respected. Okay, and we start pushing downwards. All right. Okay, this one also losing trade. Let's just see the result. This is where we got out. All right, that's about the Libra code, guys. Any questions on this one? Yes, Libra minus 1%. Okay. Divergence University. How many trades? We had 3 trades here. Okay. Pound Aussie, first trade, a sell. What did we get? That's the top of your range. You have a double wave up. Okay. You got divergence, false break, and an attempt for a sell. And what's the idea of divergences once again? We're attacking pretty much the very top or the very low, expecting to get top or low, of course. Tiny stop loss just covering the high. That's it. And then you're looking for the risk reward. So if it's not yet ready to move in your direction, you cut the losses immediately. All right? Immediately. like here, let's say this is a valid false break, correction and everything, you put the stop loss here. If it's ready to move, it will move. If it's not ready to move, it's not ready to move, guys. That's the idea of divergences. Well, at least the way we trade it. I'm not saying this is the correct way or the only way, but this is what you want to see. Divergence, false break, a pattern if you want to confirm further or not. You could use also Fibonacci's. Absolutely welcomed. The question is your low or high going to hold or not? If you get a false break, another one, and that kicks you out of the trade, fine. If you're there, go ahead and do the second attack. If it's still valid, of course. If not, you let it go. Okay? Aggressive sell just after fall. Yeah, exactly. Because you have the level, right? You have good divergence with the MAs and the histogram. You have a double wave, so you give it a shot. And if this is going to be the top, this is going to be the top, and we are going to see most likely at least the 50%, if not the bottom of the range. And boom, the high is respected and the price pushes lower. That's it. Yeah, exactly. Just different approach. That's all. Pound Aussie. Dorian sell trade. 1 hour chart. The 4-hour chart, we remember that it is already inside a hidden divergence, hidden bearish divergence. We got the divergence here, expecting immediate push now to the downside. Makes sense? And we're also at a good level, as you can see. Stop loss reached, price pushing higher. Let it go. Triple B. Forgot which one you're talking about, but yeah, all right. After the DU trades, 1 to 2 trades. Well, Fanny, what do you mean? I don't understand you. Are the DU trades 1 to 2 trades? Yes. We rely on risk reward simply because you can allow yourself to be wrong more times than you're right. And if you go back and check out our history, you're going to see much more reds than greens. But then if you check out the risk reward on all these trades, you see that you win more than you lose, and then you make money. Simply because you're attacking very good levels, and if the price moves, it moves. That's all. One of my favorites, I admit it, yes. I love divergences. I base most of the entries that I'm taking, I'm talking about manual trading specifically, always to be confirmed with divergences one way or another. Okay, guys, Euro Pound, another opportunity that we had. All right, a sell trade. We got here, what's that? Between these two. Exactly, hidden divergence. And what do we have? Was that the correct one? Where is the 2 candles here, guys? No, this is not the correct one. This is the one. Right, 1, 2, double wave up, and then another one. Right, so basically we said that we have the divergence with the convergence. We are looking for the cells. Double wave. Every cycle, I'm talking about 111 special, starts with a double cycle. At this stage, not counting the first leg, this is still a double cycle for us, right? And this double cycle on a very micro level is basically looking for 38 to be reached. Did we get it? Yes, we did. So can we expect it to continue lower? Let's see, what do we have? First of all, the price bounced from this zone right here. Perfect. Then we got the hidden divergence, which started developing into continuing divergence. What does the price action is telling us? Another false break. Perfect. Can we go ahead and accept it because the momentum is down, because the higher time frames are down? Is it worth the risk? Everything is saying yes, yes, yes. And further on you have the trend line, which is the extra confirmation as a dynamic resistance. And then you have the horizontal ones. You can see it here, here, this one, and then this zone as well. Is that a good zone to go ahead and look for sells? Absolutely yes. Make sense? Perfect. Moving on. This is where the target was reached, and I believe that's all. This is from the 16th last week. Questions about the divergences, guys? No questions. All right. Crystal ball, as we said, only one trade, but this one trade provides us with 2% profit. Are we happy? Absolutely yes. Pound franc now, based on our manual analysis, we know that we are bearish. We had our reasons to be bearish, lower lows, etc., etc. And this is where it becomes sweet, because crystal ball actually also finds a reason to look for a sell. So both analyses are matching. The slope of the channel is also going down. We have the probabilities and the statistics telling us down. We are now back inside the channel. Unfortunately, again, we cannot see it. I'm sorry about that. But basically, here we go. Price is reversing, coming as a correction inside the channel. We got the dates, we got the probabilities. Statistically, everything is in place. What do? We go ahead and look for double waves and sells. Where is the next action zone? Right here. Do we have plenty of room to go lower? Of course we do. Okay, pretty simple idea, going with the directions. That's all we need, guys, nothing more. And you can see that this analysis you can make in literally 30 seconds. What is my report saying? Bearish. What is the crystal ball saying? Bearish. Do I have all the reasons to go ahead and look for sales? Yes. Do I have a setup? Trend line? Yes. Take it. It doesn't have to be complicated, right? It just needs to be correct. And when it's correct, you go ahead and accept the trade. That's all. Gemini code. Let's see, what do we have here? 19th, one trade only, pound dollar. And this is where itchy hands are making you lose money. You remember what 19th was? the Monday, we said that low volumes are expected. Most likely there will not be big moves. And this one is totally on me. I took this trade, and naturally it will go against you, and it will prove you wrong simply because you're not patient enough. Right, so that was the triple down. We said we were looking for double waves and breakout for the sells. No sells confirmed yet. And that's why this is where we got the signal. Gemini and pattern look pretty much good. The momentum up is very strong. The trend line is far away. And we are currently bouncing from this zone. Okay, we have the spikes. We have good action zone. I'm pretty sure it's obvious for most of you, right? So does it worth it to give it a shot? Yes, absolutely. And besides that, we had the daily and the 4-hour chart bullish pressure in terms of divergences. And besides that, we got here the divergence followed by the convergence. The only thing not ideal as per the manual trading is divergence, convergence, double wave up. Double wave down for the buys. At this stage, you only have one wave here. I'm pretty sure we have one wave even on the 1-hour chart. If we drop down and see it, it's just one straight move. However, the system has its own reasons to go ahead and give you the signal. And the reasons are the candle patterns. Right? We have twin patterns here, pretty much with good probabilities, and that was basically the idea for which we paid 0.5%. Questions? Or we move on to Mr. Scorpio. All right. 1, 2, 3, 4 trades, guys, this week. How many trades did you have for the Scorpio traders here? Approximately. Roberto says more, 4 trades from Tiat. All right. So let's see what did we get and which ones we did accepted. By the way, Roberto, how is your Scorpio performance? Only Scorpio, not other strategies that you might be using. Drawdown means close trades or currently running? Not good. Do you have a limit for weekly running in profit? That's good. Yeah, might be a good idea. Basically, what you can do is go back once you have enough history. Go back and see how much you're winning per week. All right? So try to set the drawdown limit to around the average of the week, which means if you're going to lose this week, you're just going to lose the profits of the previous week, let's say. Right? Because if you make 3% a week and you set 10% drawdown, 3 weeks are easily gone with one bad week. We should be looking for the balance, more or less, right? Using divergences to confirm Scorpio entry? Absolutely yes, of course. You can confirm basically any type of strategy or entry that you're using with divergences. That's why I love them so much. All right, so for Scorpio, we said minus 0.8. Let's go ahead and see, guys. Dollar franc. Why did we take this trade if there is no Ford Scorpio? This is probably a simple question now for most of you, but we must cover those, guys, because we constantly have new people in the group, and it's good for them to repeat it and just share the knowledge here. Exactly. Basically, when we're missing the Ford Scorpio because we're looking for 1, 2, 3, 4, we might validate it with diamonds or action zones, right? Indeed. And in this case, we did have an action zone right here, which we are kind of breaking, but then we have an action zone slightly above. Okay, so basically two pretty close to each other action zones. And furthermore, we do have the diamond, where the price is bouncing exactly from. Besides that, what did we say in the live room, guys? Where is the cycle? This one not valid, right? Because we didn't have the two candle correction here. So we look at the next high. And this is where we got the deeper pullback, right? So this is leg number one, and now you can count it as a double wave at this stage because we still didn't have the further push up. Right, so at this moment you're looking simply at the double wave, action zone, and diamond. Daily and weekly still bearish. We said that we are bearish and we are expecting pullbacks that we want to sell. Right? And this is exactly why this trade was taken. Now in this case, we did get lucky. And why was that? Because the price actually broke above here, okay, but it did not go ahead and made more than 5 pips, right? It's 3, 4 pips, I don't know, but it didn't kick us out. So really this time this is pure luck, and well, happy for that. You can't be always on the wrong side, right? The market should throw you a bone from time to time. So that could have easily been a losing trade, but luckily we did not get kicked out. And just a few bars later, this is where the target was reached. Dollar cut, a sell trade here, all right? What did we got, guys? We have reached and entered inside a pretty good resistance level. 1, 2, 3, 4, boom. Daily and weekly, down, right? So this is nothing more than momentum and a good level to attack. And all you need in this case is just a few pips from the price down. Of course, this is the 1 hour chart. Just a few pips lower to collect your profits. We are not looking for anything major or crazy move to the downside. Just a few pips. Now the bad part is that the signal is actually, and the entry, not the signal, the entry comes inside and more to the lower part, right? Which technically means we could go ahead and spike through these levels here, going to this zone, right? Why we took it? If we already have a blue diamond against, I would not, but it's true, the rest is good. Sorry, not diamond, blue Scorpio. Yeah, good question. Simply because you had the 4 Scorpios before that, you have a valid 1, 2, 3, 4 count. and you're inside a resistance zone. Of course, moderate setup with the hard time frames in your direction. Right? The diamonds are simply marking, according to the software, pullbacks, tops, highs, lows. No, nothing more. Right? So you have a setup and you have the diamond showing that this is a leg on its own, nothing more. And nothing has changed in terms of the setup here. All right, pushed up, and that happens when you take it a bit more aggressive. Now in this case you have again 1, 2, 3, 4 validated by a diamond, which means if the price pushes lower or slightly higher and then pushes lower, would that be a valid setup on its own? Roberto, you read my mind. Exactly. Of course we're going to reattack it. Okay. Yeah, so that's about the dollar cut. Aussie yen. Exactly. The risk reward is in your favor. You have all this room to the downside if the price starts moving. And if you're in front of the computer, this is where you can actually trail the stop loss manually. If you want, you can even remove the expert so it doesn't make some crazy decision for you. Put the stop loss to break even once it moves in your favor and move the target. Just extend your targets and the risk reward. Is this a valid entry, guys? There is something tricky here. Let's see if you're going to spot it or not. And if you do, let's see if you are going to find a reason why the trade was taken afterwards. Wow, eagle eyes. I'm going to call you Vlad number 2. Alright guys, other opinions please. Roberto, by the way, which spike are you referring to? This one. Exactly, guys. Based on the ranging, the big ranges, we really need to come up with a name for this one. Every time I'm struggling. Anyway, when you have 2 Scorpios in a move, right, and then you have 4 Scorpios inside, we said that this is not a valid entry, right? The only way to validate this, if you include one of these Scorpios to the count. In this case, the count that we have here, 1, 2, 3, 4, is not validated by any way using any of those 2. So why was this trade taken? Any ideas or suggestions? Inner Scorpios. All right. All right, let's go ahead and cover it. What do we have here? Exactly, a range. And what do we have here? A cycle on its own inside the range. Exactly. And what do we have here? A diamond. Where is our signal? Right at the top. Do we have room towards the bottom of this range for the target? Yes, we do. What's our direction for AUSN? Down. So this is what we call being adjustable and flexible towards the market conditions. Simply because we have a rule which says be careful when you're inside the inner Scorpios, the big range, does that mean we're simply going to not take a trade when, let's say, 3 or 4 things are saying yes and only this rule is saying no? Of course not. Well, you might decide not to take it, but for me this trade makes a lot of sense, guys. Range, double wave, diamond, bearish direction. What else can we ask for? And the target, of course, makes also sense because it is in between, in the middle of this range, and it's sitting right on a good support and resistance level. The action zone, basically. Okay, and furthermore, the stop loss in this case is even above the highest spike that we had here. And it's above the diamond zone. Did we? Not sure about that, don't remember anymore. So many trades, so many charts, going nuts. But if you say so, I do believe you. So if we had a divergence, boom, you have another confirmation here. Okay? So this is what being adjustable and flexible means. Don't be ignorant, guys. Read what the market is telling you. And after all the explanations, we after all ended up with a loss here, which is again fine. As long as you can validate the trade and make sense out of it, losses are welcome. They're part of the statistics. Kiwi. One trade here. I believe this one is pretty obvious. 1, 2, 3, 4. We also got lucky here because of the Scorpio. 1, 2, 3, 4. So basically, if we had a Scorpio here, that would have been a buy signal. If we had a Scorpio here, that would have been a buy signal. I'm not sure if you see it, but that one also switched MFD. But no, we didn't. We only got the Scorpio right here. So that's the good part when the Scorpios, right, are set to slower mode, if we can call it this way, and you don't catch these tiny corrections that are not real moves. All right, so once again, well done here because it filtered 2 bad signals, even though the third one also failed. But if you, let's say, you kept attacking, that could be 3 losses instead of 1 loss. Right? But I believe the idea here is also pretty simple. 1, 2, 3, 4 MFD switches, and unfortunately it pushed lower here, collecting the stop loss again. Was that the last one? Yeah, it was. So that's pretty much everything, guys. Any questions, any charts that you collected during the week that you want to share? If you do, you can post it now in Telegram and we can discuss it live. So people who are watching the recording can see it as well. If not, I'm going to wish you a fantastic weekend. Perfect. All right, guys. Have a good one as well. Wishing you really fantastic weekend. And I'm going to see you next week. Bye for now.